Welcome to this month's market update. I'm here today with KC Lowe, Senior Consultant from Frontier Advisors Asset Allocation Team. Hi there, KC.
Hi, Wayne.
Well, there's certainly been a lot happening, as has been the case for the last few months. Maybe let's just start with a quick update on market performance, and maybe if you could just touch on perhaps two or three of the key drivers behind that performance.
So there's been a few wobbles in the market, but in general, global equity markets have been strong, despite us being in a once-in-a-century pandemic and this rising global geopolitical tension. So global equity markets are up about 40% since the bottom in late March, and they're now about 5 to 10% below the peaks in late February. So the market performance has been really strong recently. And in terms of the key reasons for the strong performance, we've covered this in previous videos, and the reasons haven't really changed that much in recent weeks. So there's really three reasons. One, the number of COVID-19 cases, and we are seeing some flattening in the curve, especially in developed market countries, although cases in emerging market countries are still very concerning, especially in Brazil and India. Two, the unprecedented fiscal support policies from governments and monetary support policies from central banks around the world. And three, there's been some improvement in positivity and optimism in the market as economies start to reopen around the world.
KC, you mentioned emerging markets, a lot of concern there. What should investors be thinking about with respect to emerging markets?
So as I said, in terms of COVID-19 cases, they are increasing in emerging markets, so it is concerning. And these are in countries where the healthcare systems are also less developed. So there's this exacerbate the impact of it. Now, emerging market countries are also facing other issues right now as well. So one, the collapse in the oil price recently is going to be negative for their economies. But we've also seen a reduction in trade, as well as a significant increase in capital outflows as a result of the recent increase in risk in the market. So they're facing quite a number of negative impacts right now. And if you look at a recent report from the International Monetary Fund, so the IMF, they've also shown that in terms of the fiscal support policies, these are far less right now in emerging markets compared to developed markets. So not only are they facing all these issues, they're also receiving less support from the government, which are leaving their economies much more vulnerable right now.
So definitely some challenges for investors with funds in those markets. But how about here in Australia? The Reserve Bank met in June. What was the outcome of that meeting, Casey?
So unsurprisingly, the Reserve Bank kept the monetary policy stance the same. They're keeping cash rate at 0.25%. They're also maintaining their current quantitative easing and yield curve control programs. So the policy around that haven't changed. But what is worth noting, though, is that despite the highly uncertain outlook on the economy, there seems to be some optimism starting to feed into the Reserve Bank's thinking. So in their statement, they spoke about how the economic downturn could be less severe than they expect, largely driven by the COVID-19 lockdown restrictions easing much earlier than they initially thought. Now, if we look at the economic data, it is very heartbreaking that the economy lost 600,000 jobs in April. But there are some positivity economic data elsewhere if we look. So in terms of consumer spending, that seems to be recovering quite strongly. If we look at some high frequency data from the Commonwealth Bank in terms of their credit and debit card spending data by consumers, they're now at a level that's above where it was this time last year. So there's been quite a lot of improvement there. So there's some positivity in the economy, but it is still having it quite rough right now, and there's of course the risk of a second wave outbreak too.
So much volatility day to day, but overall some positive signs ahead, it seems, for investors. Thanks for that update, KC, and thanks to you for viewing.